Hi, everyone. My name is Dustin Miles. I'm with Momentum Multifamily. I'm excited to have Kish with us here today. And Kish, I'll kind of hand it over to you. And then, would love to learn more about you and a little bit more about your background.
Excellent. Thank you. Appreciate that. So yeah, my name is Kish Rao, R-A-O. I live in Philadelphia, Pennsylvania. I've been a W-2 employee for, 200 years, but not that long, but for a while. And maybe about 10 years ago, I was doing some projections with me and my wife. I had two young kids, and we were trying to figure out, you know, where we're going. When the kids go into college, when they get married, when we retire. We were looking at the numbers, and then it's when I started having a mild heart attack, realizing this isn't going to work for us. We're going to have to continue working till we're in our 70s and 80s, and
Yeah,
not interested in that.
right.
So we started looking at options. We started looking at what can we do. I heard about real estate. My wife read the Rich Dad Poor Dad book, and so I started looking at real estate, but I didn't have much money then based off my situation. So I heard about wholesaling. So I signed up for a course. And let me tell you something, Dustin, that was a spectacular fail. That was definitely not me at all.
I'm in that club with wholesaling too. So
I've got a lot of good friends that are in
yeah.
wholesaling and they're killing it, and
Mm-hmm.
all the power to them. It just did not fit what I do. So I learned that the hard way. But it's okay. My lesson there was I took action.
Yeah.
Even though I failed, I at least knew what didn't work. So my lesson was that let's continue to take action until you find something that works. So I learned about turnkey rental properties. I got into that. And that's when I started making mailbox money. A company down in Alabama. I started working with them. I picked up two properties down in Alabama, and like I said, they started bringing in monthly income, and I'm like, this is cool. I'm making a couple $100 a month,
Yeah.
and I'm not doing anything. So
Right.
I was excited.
Yeah.
Then I realized, what else can I do? I mean, this is nice, but how can I get more money? So I met a gentleman out in Jersey, and he introduced me to multifamily investing, and I'm looking at him thinking, what the hell? Me buying an apartment? Not a chance. I don't have
Yeah.
that kind of money. So he taught me about syndications. So
Mm.
learned about syndications where I can just invest a small portion of the total amount that they're looking for, and I can make money off that, off the apartment. Thinking, okay, this sounds good. So that's when I learned about LP. LP stands for limited partner. I got involved with that. This was 2019 December.
Okay.
Yeah,
Okay.
everybody knows what happened in March 2020.
Yeah.
And unfortunately, this operator was not able to pivot fast enough. So
Oh,
he did not get the projections he wanted. But hear me out. I actually, I felt like I did very well compared to turnkey properties. I made some decent money. But, this is my first, step into the multifamily realm. So
right.
I only knew what I knew. And yes, thinking back to it now, yeah, the money wasn't great, but back then, oh, I was happy with it. But I knew I could do better. So luckily, I was able to get out of that within less than 2 years. And I went into another syndication. This was down in Georgia.
Hmm.
And this one, I doubled my income in 18 months.
Oh, wow.
And when my wife saw that, she's like, can we do that again? So that's when I started getting into multifamily. That's when I realized that multifamily is something I liked. I started studying it. I joined a team, and our team focused on acquiring multifamily properties as a GP. Now, granted, when we joined, when we put our team together. It was around this time when the interest rates started going up, the landscape started changing.
Gotcha. Okay.
So we did hit a lot of challenges, but we did become a strategic co-GP for a couple different properties. 186 unit property down in Arizona,
Okay.
another 40 unit property, development property down in Atlanta, downtown
Hmm.
Atlanta, actually. So
Okay.
we did make money, which is great. So we're happy about that. But we're focusing on becoming our own GP.
Okay.
Due to some restructuring, we decided to rebrand. So we're within the next month or two, we will be rebranding into another name. We're going to be more streamlined. We have different strategies moving forward. So I think 2025 is going to be a fantastic year for multifamily.
Awesome. Yeah, that's great. Yeah, appreciate the background and color and yeah, sounds like you've had some really good successes and all that. Did you I guess how the partners, people you've partnered up with, how did you meet them? Did you meet them at a conference? Are you part of a mastermind or coaching program? What does that look like for you?
Great question. So back in 2021, 2022, I was part of a
Hmm.
group called the GOB Network,
Oh yeah. Yeah.
located up in Chicago area.
Hmm.
And
Hmm.
I really liked that network because I was able to meet and network with a lot of people. That's where I learned a lot about multifamily. And that's where I met most of my partners.
Oh,
Number
cool.
of partners was part of that. I brought one of my very, very close friends involved because he started seeing what I'm doing. He's like, Kish, I want to do what you're doing. So I got him involved. He lives out in Jersey. I'm in Philly. So we do meet every couple of months. But he's somebody that was outside the group, but joined because of the multifamily opportunities I was
Right.
providing.
Right. Gotcha. Yeah. Yeah. I don't know a ton about the GOB network. You have known Jim Biggs for a number of years, but that's awesome. That's great. Yeah. It's great whenever you're able to. It's just like anything. If you want to go be a runner, go get into a running group. You want to go be a triathlete, go get in a triathlete group. If you want to be a multifamily investor, go join a multifamily group. So it's not definitely not rocket science, that's for sure. It is hard and it is does require work, but it's not don't think it's necessarily rocket science. Is I guess what is in terms of your looking at 2025 and all that, do you guys have certain criteria that you're looking for in a deal, location, age of asset? What does your box look like?
Great question. So our box changed from our old regime to what we're going to now. So we're focusing on 50 units and higher. We're I live in Philly area. My other partner lives in Jersey. We've got other partners on the East Coast. So we're looking at Pennsylvania, central, western Pennsylvania, maybe Pittsburgh and surroundings,
Okay.
maybe even parts of Ohio. So that's the current location. 50 units or higher as far as C class properties, or maybe B, depending on the locale, depending on
Okay.
price. We are looking to do a little bit of reno so we can provide value add. And our goal is to not flip, basically purchase apartment, fix it up, increase the valuation and then sell it in a couple of years. Our goal is to hold on to it for cash flow for
Gotcha.
years.
Gotcha. Okay. Yeah, and I think I don't know, a lot of and you did, you mentioned you did very well on a deal or two. It was a quicker turn and all that. I don't, I think that you was more often kind of, especially kind of 2012 to 2019 or so, and then also kind of again in 21, you had these declining cap rates and you had rents jumping up, And so you had this, interesting mixture and this interesting time. Like, I mean, honestly, like some of the deals, because I started in 2012, and some of the deals I got into, around that time, we did really just to be quite honest, didn't have to do a whole lot, and we could double our money in 2 years simply
Mhm.
because cap rates were going down, and we were bumping rents $50 a month, or I'm sorry, $50 probably every 6 months or so. So we were raising rents, quite a bit. And then at the time the rents were only 600 or 700 bucks, so $50 is that's a lot. So, um, anyways, but so I like your strategy. I think that yeah, kind of having a longer term view on things is awesome and great. And I think if you're buying, whether you end up holding it long term or not, if you go into it with that long term mindset, I think that puts you, most likely in a much better spot as opposed to, oh, we're getting in and out in 2 years. Um, it why so where did 50 units come from? Are you guys going to be using third party? Are you going to be self managing? What does that operations part of your business look like?
Great question. So originally we were looking at smaller properties, 20 units, between 5 and 20, just like
Mhm.
small apartments.
Yep.
We realized that it's going to become more expensive for us in the long run because something like that, trying to find a property manager to help manage that for us, especially if we don't have any boots on the ground,
Right.
would cut into our profits. And we realized that, we could get more doors and probably spend less and spend the same amount of time and effort and energy for
Yep.
5 doors or 6 doors.
Mhm.
So let's go bigger. We didn't want
Yep.
to get too big, 100 units or more, because for me, I mean, 50 units is a little outside my comfort zone, but I think it's doable. 100 units is way outside my comfort zone. Today, that could change tomorrow. So,
Right. Right.
but that's where we got the 50 from.
Okay, gotcha. Well, one thing to, just depends on what you guys want to do and your strategy and all that, but kind of typically once you start getting, about depends on where you are in the country and the vintage and all that, but once you kind of get above 150 or so, you're competing against almost a different type of buyer. It can be a a very large group that you're competing against too, especially on the newer stuff. But well, great. And our so with the GOB network, and then are you guys in a any sort of coaching program now, or are you guys kind of have graduated from that, or where are you at in your journey there?
So right now, I feel like we graduated. I'm no longer with the GOB as an active member.
Hmm.
I'm still there as a passive participant, but
Oh, cool.
I we are focused, right now because of our rebranding. And now I have more time on my hands. We'll talk about that in a couple minutes.
Yeah,
We'll
yeah.
be I'll be more focused and streamlined for 2025 to just spend a lot more countless hours, you know, talking to brokers, just looking at properties, doing tours, and just closing on deals for 2025. That's our strategy. It was a little bit harder before because we all had W-2 jobs. Now,
Mm.
I made a jump earlier this year to get out of my W-2 job. So as of January, I am, let's just say I fired my boss.
Yeah, yeah. Wow. Was that scary? Was that, what I guess what kind of gave you, was that scary? And then what kind of gave you the confidence to be able to kind of step out like that? Because you were, W-2 for, a long time.
Mhm.
I was as well. And I remember that was, so yeah, I'd love to hear your thoughts there.
Sure. And my W-2 job paid well. So,
Hmm.
leaving that was kind of a punch in the gut. And, my
Yeah.
wife is a little concerned as well. But she knows what I'm doing. And besides real estate, I venture in investing,
Mm.
and I also have my own coaching program that I do.
Mm.
So I do a number of different things, and I guess last year, 2023, 2024, I made more money on one of my investments than I did with my W-2 job. So because of that, I felt confident that
Yep.
2025 I could quit my job, but focus and work really hard on building my multifamily portfolio so I would have continual passive income, moving forward. So that,
Awesome.
that's my strategy, and I feel good about it. It is a little stressful at times, but just a little bit.
Yeah. Yeah, gotcha. Yeah, do you mind sharing, I guess, what, some of the investments that you'd made to kind of give you, the cash flow and the confidence to kind of make that break from the W-2?
Sure. So, a number of years ago, I did a little bit of PML. PML is a private money lending. That was for real estate opportunities,
Mm-hmm.
and I did make a little bit of money on there. I realized that you make more money on PML opportunities than you do on like long-term holds.
Mm.
However, you there's a more of a risk factor. So because it's a shorter time frame, you really need to trust the operator. You need to know what they're up to and know what they're doing and just keep on top. Sometimes they pay monthly, sometimes they pay everything at the end. So it
Yep.
depends on what your buy box is as an investor. So I learned a little bit about PML, but then
Mm.
I learned about a new asset class, which I've never heard of before. And this was down in Texas, and this was about 2 years ago. A friend introduced me to investing in, 18-wheel semi
Mm.
trucks. And this is in the transportation and logistics industry.
Mm-hmm.
So I got involved with them. I started speaking to the operator there. I found out about his backstory. He was a truck driver. He
Okay.
also was a real estate investor, when he was late teens, early 20s. So he understood the real estate market. He
Mm-hmm.
was also a truck driver by trade, and he understood the gaps, the nuances, and what can make you know truck driving more efficient and more effective. So what he did was he blended it together into one.
Mm.
He applied strategies from real estate into the trucking world,
Oh, wow. Okay.
and he was able to figure out how to make some real money there.
Wow.
It was all through PML, all through borrowings, and he was also helping out the truck drivers, where
Yeah.
truck
Yeah.
drivers can't really purchase their own trucks. He learned that truck drivers that own their own trucks do a better job taking care of the trucks. They
Mm.
do a better job completing projects, delivering loads. They make more money, and they're in general happier, and they treat their
Yeah.
family better. It's great. The problem is they go to a bank to buy a truck, to get a loan to buy a truck.
Uh-huh.
They get turned down left and right just because
Oh,
of their
wow.
credit history, because of their education, because of their history. It's challenging for them.
Right.
So
Gotcha.
the operator decided to become the bank and help these guys out. So he would finance the trucks
Mm.
on their behalf. They would own it. They would start making the money, and then he would end up, collecting the monthly cash flow. So it's a win-win. Problem
Yeah.
is, initially he didn't have that kind of capital, so he brought in investors
Mm.
like me. So
Yep.
I came in and I gave some cash, and he quickly used it to purchase trucks. He sold the trucks to the drivers. The drivers quickly, started paying me monthly cash flow. And then in a couple months, not a couple of years, in a couple months, he refinanced me out. So I got my money back in 90 days,
Wow.
plus a decent return. So for me, I thought the money was good. I was appreciated that, but more important, the impact. He was making a positive impact for these truck drivers, giving them a better life, and for me, that's what resonated the most.
That's great. It's nice whenever you have, that, win-win. scenario, and it's not like it's some of the not all, I'm sure not all of them are, but there's some predatory kind of lending practices out there and all that. So that's awesome that kind of a win-win for everybody. They get to own a truck that they otherwise wouldn't be able to own, and it's probably beneficial for them to try and pay that off or refinance after so long. But that's awesome. And so that sounds like a really good cash flow vehicle. And then what are any is that so multifamily, and then kind of the truck driving, has that been most of your most of where your investing has gone, or is there any other asset classes you've invested in as well?
So as far as investing, those were the big ones I invest in. I do have other financial strategies I work on.
Hmm.
So I learned maybe about, it was 8 years ago. My wife was asking me, this is around the time where we were trying to figure out, what are we going to do?
Yeah.
Our kids are, we're not going to have enough money for our kids' college, for their wedding, our retirement, blah, blah, blah. So my wife asked me, have you heard of something called infinite banking?
Mm.
I'm looking at her thinking, what are you talking about? That just, it
Right.
sounds a little frou-frou. So she said it showed up in her feeds because she was listening to Rich Dad Poor Dad, and
Yeah.
it showed up on her YouTube feed. So I said, okay, I'll look into it. And I started doing some research. Wasn't much out there, but luckily I found a group that was actually flying in from Kansas to Philly to talk about infinite banking. And this was going to happen in 2 weeks. So I said, you know what, let me just sign up. This was
Yeah.
a weekend boot camp. They say you're supposed to read this book and you're supposed to do these exercises, and I didn't do any of that. I,
Okay.
I just showed up.
Yeah.
And I figured, what, worst case scenario, I come back with a full, free dinner and free breakfast the next day. But yeah, they started talking about infinite banking. They started talking about what it is, the benefits, and how the wealthy use it, and how the average person can use it. And I said, this is different. Yeah, my dad never taught me this. None of my friends know about this. So I started asking these guys questions, and more questions, and more questions. And let me tell you something. The amount of patience these guys had was amazing. And they kept answering my questions, no problems. They
Yeah.
weren't they weren't trying to sell me on anything. They were really focused on educating, and
Yeah. That's
I love
great.
that. So 5 months later, I decided to implement the infinite banking concept into
Mm.
my personal financial world, and it was the best thing I've ever done. Prior to that, I was very stressed, couldn't sleep, always worried about money, always worried about what's going to happen to my 401k, where's the stocks going,
Mm.
and depending on who's in the office, that's a big factor as well. Now
Right.
I sleep at night. I'm so at peace. I have a daughter going to college this fall. I have
Mm.
barely any money in my Wells Fargo, Capital One, Bank of America bank accounts. But I know that I'm going to have money for my daughter's college, for my second daughter's college when she goes to college in 4 years. I am just, you know, very comfortable right now. Very, very comfortable. And I I give kudos to the company that introduced me to infinite banking and the whole concept, because now I understand how it works, and I so passionate about it that I became a coach myself.
Oh, cool. Okay. Got it. All right. That's awesome. And I guess kind of switching gears a little bit. So do you I guess kind of zooming out a little bit and looking a little bit more of the macro just in your time in life and all that, are you how much of it are you spending on multifamily versus being a infinite banking coach, and I guess any other kind of business type of activities.
Sure. So, I mean, with the tracking, that's pure investing. So I do spend time on that, but that's truly passive, which I love.
Yep.
Makes
Hmm.
it easy for me. 2025, I am focused on those other two aspects, infinite banking and multifamily. I need
Hmm.
to make both of these work for me, and that's my focus. It's about 50-50.
Okay.
And if things go well, I could put less time into the infinite banking because I just want to have that work, you know, as an automated process, and the
Hmm.
people will find me and come to me to learn and help me implement the infinite banking concept into their financial portfolio. So, but right now, it's multifamily because multifamily is a long-term goal for me. That way, if I have two or three decent, apartments that
Yep.
bring cash flow in, I should be set. I should be
Right.
set.
Awesome. Uh, okay. So switching gears a little bit, what, is there a piece of advice that you've, received or maybe a quote or a book that something that has really, made an impact on your life?
Absolutely. One of my favorite books was The Go-Giver.
Mm,
I
yeah.
think it's John Mann, if I'm not mistaken, and I really resonated with that book. Everyone's always heard, be the go-getter, be the go-getter, do this.
Yep.
Do that. This is a flip. Go give. So
Yep.
I'm all about just giving, sharing, just helping others, and doing this unselfishly, not doing it in hopes of something will come back to you.
Yep.
So just keep that mindset. If you keep that mindset, organically, the universe will pay attention and they will reward you. And I've
Yeah.
actually seen this firsthand, and it's pretty uncanny on how that works. But like I said, for me, I'm not focused on what I get out of the deal. I focus on what I can get out of the deal.
Yep.
So
Yep.
that is,
I
go on.
Oh, I was going to say, that's one thing that 'cause, you have multifamily partners and and other GPs and all that you've worked it with, and that's when we worked with a lot of fund managers and GPs and all that in the past, and that's one thing that I've really noticed when when people are asking kind of more questions about, like what would I get paid and all that versus like getting to know me, I'm like, oh, red flag. So, but yeah, we, in general, are, we're the type people we're looking to always work with, or, team oriented, just, willing to, just I mean, you can't control necessarily the results, but you can control your actions and your effort and things like that. So that's what we kind of look for. But anyways, sorry to cut you off there. So
No, no, it's all good. It's all good.
yeah.
The other piece of advice I would tell people is educate yourself. Uh,
Mm,
spend some time reading, learning. There are so many tools, so many resources out there. We talked about the GOB network earlier.
yep.
YouTube University. There are so many things on YouTube. You
Hmm.
my deal, what I do is if I see something on YouTube, I look at the, who published it and just reach out to them and just, set up a call and just have a conversation. Just find out more about them. So
Yeah.
that's one of the things I do. Locally, if you can find groups to spend time with
Hmm.
and, learn from them, that's another venue. But for me, it's all about education, and that's what I tell people. Just learn, read, you know, find books. Books are cheap now.
Yep.
Just
Yep.
just educate, educate, educate.
Uh, what is something that surprise or that people are surprised about whenever they meet you, or something about you that surprises people?
Uh, Good question. I think it's just the amount of stuff I'm doing right now.
Hmm.
And I'm doing all this stuff on my own. A lot of the stuff we talked about, one thing I can mention as well is I also run an an investment club
Oh,
that
cool.
I
Okay.
started back about 3 years ago when I was working. When I was working, I wasn't doing as much as I was doing now. When I was talking to people about investing and investments and real estate, very few people knew what I was talking about, and
Right.
it was almost comical. And then I
Wow.
realized that, you know what, maybe I can help educate them. That's a way for me to pay it forward.
Yeah.
So started a club at work called the Tech Investors Real Estate Investment Club,
Oh, cool.
and that lasted a couple of years. And what I did, I differentiated mine by bringing speakers from outside in
Mm,
to talk to us. Talked about, different alternate assets, different ways to make passive income, how to start a side hustle, how to build
awesome.
generational wealth. And this was going great. Our company went through an acquisition, and around that same time, I decided to take it outside my club.
Mm,
Outside work.
yep.
So I rebranded that. It's Wealth Builders Interactive,
Oh, cool.
and
Okay.
that's what we renamed it to. And it is for anybody who's a W-2 employee, for anybody
Mm,
that's an investor, anybody that's willing to learn. They can sign up and they can learn. I've got great speakers. Anybody that signs up will get my vault. My vault contains every speaker and every recording that I've had since day one.
oh, wow.
So
Wow.
it is. There's a lot of value there. There's no fluff. I don't do any fancy editing. No intros, no outros, no soundtracks. It's just
Right. Right.
pure
Right.
conversation. It's pure presentation, and people like that because
Awesome.
that's me.
Yeah, that's great. I really appreciate your time today and just your energy and your resourcefulness and just kind of your background and all that. What's the best way for people to get in touch with you, to reach out, to learn more, about multifamily, about, infinite banking, what's the best way to get a hold of you?
Sure. So I have a website. Our website is KKR Wealth Group. And if people want to set up a meeting with me, they can just go to meetwithquiche.com.
Awesome. Well, that makes it easy.
Yes, it does.
Yeah, easy to remember too. So, awesome. Well, yeah, appreciate your time and great to chat again and look forward to hearing more about your successes for 2025 and we'll talk soon. Thank you, Keish. Good seeing
Oh,
you.
thank you very much for having me, Dustin. Have a great day. We'll talk
You
soon.
too. Thanks.
Take
Bye.
care. Bye bye.